Good morning, everybody, and welcome to the Daily Energy Markets podcast on November the 21st, the day in which oil sanctions, the latest US sanctions on the major Russian companies, are to come into effect. And Brent crude oil is down again this morning at over 1%. The markets don't seem to be too concerned about these sanctions coming into effect today. Let's kick off with Bora Bariman, Managing Partner, Hormuz Straits Partnership. Are you concerned, Bora? Or is this time going to be different? U.S. sanctions on Russia's major exporters. Your thoughts on the market's likely reaction as this sanctions take effect from today?
Well, clearly, the U.S. for a while it's been uh, expressing a preference for an unpredictable order that gives it a free hand, and I suppose this is another, no pun intended, trump card, and the rest of the world just has to get used to it. And there's the G20 coming this weekend in South Africa. As I understood from reports yesterday, the United States was not going to send any officials to it, just breaking from this platform for consensus-based rules making amongst at least its allies, because Russia had been pushed out of it. Because I suppose, countries like South Africa, India, they get affected. They bear the brunt of some of these energy sanctions.
Let's go to Italy, where our new Italian commentator, Kate Durian, Mies contributing editor and non-resident fellow at the Arab Gulf States Institute, is flaunting it in front of us all in her beautiful retreat there in Italy. Kate, sorry to disrupt you from the morning cappuccino, but tell me your thoughts on this latest. Sitting in Italy there puts you a little bit closer to all things European, and certainly Russia and Ukraine are at the front of the headlines today with supposedly a deal that Trump is selling to Zelensky again, and sanctions on Russia's big companies coming into effect today. Which of those two separate things are, although connected but separate in their impact for the oil markets, do you think is going to win out?
Oh God. I mean, the Europeans haven't been consulted. They're the ones who are most affected by all of what's going on. But I think what we're seeing is that the sanctions are working. Well, I mean, the early signs are that China, particularly the state-owned refiners, are going to be reducing their imports of seaborne crude, not pipeline, because they still have the pipeline crude coming in. And Reliance said they won't be renewing their purchases of Russian crude. So I mean, it's not going to be apparent immediately, but it would appear that the sanctions are going to reduce the flows of Russian oil. That's going to have an impact on the Russian economy.
Although we're not seeing it in the oil price, at least the markets don't seem to be too concerned about that aspect
Well,
of it,
because it
i.e.,
was, yeah.
less oil from Russia, i.e., tighter global market.
Yeah, because that was a few weeks ago, and there is enough spare capacity, and OPEC Plus is going to be increasing its production in December before halting it. I mean, they can always tweak it again if it looks as if there's going to be a shortage of supply, but I don't think so, because you've got stocks rising. I think we saw the latest from the US. Prices at this level, I suppose China will continue to buy for the strategic reserve. So I think we're not in a place where, the market isn't panicking. But again, if you believe that this deal that is being, proposed is going to be acceptable to Zelensky, I don't think, Kiev is not very happy with ceding territory to Russia. It's not, their constitution doesn't allow it. So I think we're a long way from seeing an end to this war, I think.
Colby Connolly, head of Middle East content at Energy Intelligence, based here in Dubai. Colby, I'd like to get your thoughts although it's sort of tangential to the immediate news of U.S. sanctions on Russia, but not too far away, given that Saudi Arabia, the world's largest oil exporter, and the U.S., the world's largest oil consumer, met in met in Washington this week. Mohammed bin Salman and President Trump. And while oil wasn't really front and center, your thoughts on now, now that the meeting is concluded, is there any takeaways from it you think that are relevant in any immediate sense for the energy markets?
Well, for energy markets, I'd have to say probably not. I mean, it's, the meetings and a lot of the agreements that were signed showed that this is really a broadening of the relationship in a lot of ways. We'll have to see how much of it plays out in the next few years. But I mean, the conventional wisdom for the longest time is that this has been a relationship that's primarily centered around energy and defense, and it's growing beyond that now. It's of course, I mean, it's still energy based in the sense that Saudi Aramco is investing in U.S. LNG, and we've got the beginnings of a civil nuclear partnership growing out of this. But it's more than that as well. It's the tech industry is playing such a big role, and of course the Saudi energy landscape domestically plays into that in some sense as well. But I think you're really starting to see a new era of U.S. Saudi ties coming out of this, at least a nascent one, and it'll as it evolves, I think we'll see different implications for markets in various ways. But the take home message from this summit initially is that we're growing beyond that. It's still going to lean pretty heavily on the energy pillar, but there are other pillars now as well.
Does growing beyond that also include what appears to be a sort of historic departure from Saudi Arabia as the leader of OPEC Plus? The departure from maximize price to maximize supply, maximize market share. Is it a coincidence that these all seem to be happening at the same time, this sort of expanded relationship you talk about between Riyadh and Washington, as well as the fact that Saudi Arabia stepped back from seeking $80, $90 oil and seems content with $60, $65 oil?
Yeah, I mean, I think over the last couple of years, continually shouldering the burdens of a lot of these cuts, and seeing non-OPEC growth, post a lot of strong gains, and certainly until recently, let's see how things play out. Some strong projections for non-OPEC supply. It was clear that another approach was warranted, and I think this is just the latest iteration of what Saudi leadership of the alliance looks like.
Bora, just stepping back into the idea of these sanctions with Russia coming into effect today, a lot of stranded oil on water, perhaps assets across Eastern Europe owned by these Russian companies. How do you see that playing out? Is markets again dropping today after dropping yesterday? Don't seem too concerned about disruptions, supply chain, logistics, etc. Your thoughts on that aspect of how this mechanics of these assets and on water oil get resolved in the midst of this fairly complicated another layer of sanctions?
The sanctions are clearly intended to curtail supply, and we would expect some type of spike, but from the European American perspective, I don't think they see a need for this. At least the crude oil is not coming into the mix for them. And why I say that is the jobs numbers that have been building throughout the year, and especially in Germany, right? You see Volkswagen, ThyssenKrupp, big names, Bosch, laying off tens of thousands from their industrial workforce. Also, Japan has these major players like Nissan, laying off tens of thousands of people. When you look at the countries that might be a bit more hawkish, the US and the UK, it's really, the Amazons that are making most of the layoffs. But, I don't, and again, stepping back, the US looks at its allies and says, well, you're not going anywhere anyway. You don't have that kind of demand for this oil. So let's try to.
So in a way, the timing is good for this action, if you like. Obviously, from the point of view of it not delivering a big squeeze on the oil market, the intended impact being that, I mean, at least the intention as articulated, if you squeeze off Russia's source of revenue, you'll drive them to the negotiating table. Are we seeing the success of that strategy with this apparent deal that Trump is selling to Zelensky that he got in the post from Putin?
I see that there is a change in tone. Was that directed toward Katie or myself?
No, yourself. Yeah, Bora, follow
Okay,
up.
yeah. I see a change in tone, and I see one of Donald Trump's mates, bros, Erdogan in Turkey, having hosted just over the past few days Zelensky in Istanbul, where they seem to have a very good chemistry together. And from what I heard, those were very productive talks. So I think, Erdogan, who is a bridge to Putin, Trump, another bridge to Putin, coming together with Zelensky, spending more time together. I think some things are moving in the background toward a resolution. So I'm a bit more optimistic than Katie is that this war will be wound down into something at least more low intensity than it is today, because it's just costing so much money for everyone. We see how much money Germany has to borrow to transfer to Ukraine, and the UK, another one of the strongest backers of the Ukrainian military, on the brink of financial difficulties, to put it mildly. So, and
Well,
Trump,
planning to put an exit tax when the next time you go to visit home in Turkey, you might have to pay a 20% exit tax to get out of Heathrow.
indeed. So Trump, I think he can throw some sanctions bones into the mix rather than sending more money into the war. So his I would say symbolic gesture is here. You know, the Russian oil has been finding homes for itself, hasn't it? And it's been almost a subsidy to certain economies that can buy it at a discount. So just I suppose uh, balance the playing field against those growing economies. I think Trump is saying, okay, let's throw in these restrictions on the Russian oil. That's my take.
Kate, just picking up on that, is your skepticism more about the fact that there's just no obvious resolution for the war in Ukraine, or is it more skepticism because of, for the 100th time, we haven't seen sanctions enforced anywhere to any great effect? Where do you rest your analysis on that?
I mean, what this peace plan supposedly being floated around would imply is that, you're giving concessions to Putin, and a lot of people are not very happy with that. But, to go back to the money issue, there's this 100 billion in frozen Russian assets that's supposed to be maybe earmarked for Ukraine. And I think the Europeans are being quite cautious about releasing it. I think it's mentioned in the deal. I'm not sure how it's going to work out, but I'm just skeptical because there doesn't seem to be a sort of very coherent foreign policy in the US. It's concentrated in the hands of the president and somebody like Steve Wynkoff, who seems to have been really taken by Putin when he first met him. So I think it's going to be a very difficult one to sort of sell to Ukraine.
I mean, sitting now in Italy and sort of observing the world from a slightly different geography and perspective, and of course, Meloni, although sort of sympathetic in different ways to
A
Russia.
stable genius. She's a stable genius.
The stable genius. There you go. I mean, there's one new perspective. I mean, Bora mentioned the bridging sort of place of Turkey and Trump regards to Putin. What about Italy and Meloni? Do you think they would buy into a Putin drafted peace deal?
I mean, Maloney seems to play. She's a good politician. She tries to balance one against the other. But I think Italy has actually gone along with the EU position on Ukraine so far. I don't think that's going to change. But I'm just not I'm just not sure that this peace deal is more than just another attempt by Mr. Donald Trump to show that he stopped another war. He wants his Nobel Peace Prize, but I don't think there's a real understanding of what the issue is and what impact it has on Europe. But at the end of the day, it doesn't matter, whether you have meetings in Turkey, whether you have meetings in Riyadh, wherever. It's the United States that really holds the cards, right? I mean,
Colby, looking at the sort of calmness in the oil markets about this possible, Russian disruption, and if anything, it's the opposite. There isn't that much concern given the price, at least a reflection of that. But where is part of that there's still enough idle capacity in the Gulf here? There's still a lot of oil that these countries could still bring to the market, while many other OPEC plus countries are at their limit. There's still some more capacity here if it was needed. Your thoughts on where the idle capacity narrative now currently plays into the outlook for the oil markets?
Yeah, Sean, I think that, of course, the OPEC spare capacity will play a role in the sentiment that's out there. I mean, there's certainly, a lot more that Saudi Arabia and the UAE can do to ramp up if they, saw the need to do so and elected to take that course of action. Obviously, they, until fairly recently, were pretty keen on unwinding and only plan to stop in the first quarter of 2026. But broadly, I mean, I think I would, defer to more of the thinking that Kate has, which is to some extent, we've seen this movie before. We've talked about pushing through a resolution to the conflict. We've talked about different types of sanctions that have gone one direction or another. I mean, of course, everyone seems to be taking them seriously at the outset. I don't know what more of a choice anyone else would have, but it's still a case of let's wait and see, because we've been here before, and there's certainly no guarantee that this policy is going to continue. And not to sound too cynical, but so much of this rests on how the president of the United States feels when he wakes up in the morning. It could really turn on that much of a dime. I'm Dubai based now, but I spent the better part of the last decade in Washington. I was there for Trump's first term, there for a lot of the beginning of his second, and sometimes it is that simple.
Would you just sort of pick up on that sort of immediate expertise with Washington dynamics? For me, from this far away, I'm starting to kind of observe that the more Senate Republican view of the world is rising to the forefront, and Trump's sort of shooting from the hip is receding, and that sort of these sanctions on Russia seem to reflect more the kind of Lindsey Graham branch of the Republican Senate rather than the Trump sort of more maverick approach, and we're seeing the Epstein, for what it's worth, sort of the power drift away from Trump in that decision. Your thoughts on that sort of high watermark, Trump's influence, and we should now look at the Washington piece more from a wider Senate Republican area of influence as we go into an election year?
Well, I think I'd start by saying that the caveat here is that Trump's political obituary has been written prematurely many times before. So I think where the congressional view of the Russia-Ukraine conflict and U.S. policy on Russia in general is, and where the White House's view of that is, will wax and wane. I think the desire to push through a resolution to the conflict and like Kate said, maybe get that Nobel Prize is potentially driving some more seriousness on the sanctions for now. But it's maybe not cyclical, but this is something that will come and go a little bit. You know, I think there's always been, like you mentioned, that more conventional Republican view of the fact that or the view, excuse me, that Russia and the United States are not friends. But there again, what is the conventional Republican view nowadays? That's increasingly difficult to define as well. And so I think it's not a case of the pendulum swinging hard in one direction or another, so much as there's just a general rebalancing going on, and we're all living through it.
Let's go to the survey question, which is touching on some of this. What will be the most likely impact of US sanctions on Russian oil coming into effect today on global markets? Oil up to $70 by the new year. If one took a somewhat bullish approach to the impact of these of the what is half of Russian exports, practically it's 3 million barrels a day or so, that could be disruptive if we had the full impact of these sanctions. Two, oil staying around $65 by the new year. It sort of dropped off from its 65 sort of anchor place where it's been for much of the second half of this year, but it's sort of trending down to 60 rather than 65 whenever there's no wind in the sails, or sanctions to be ignored and have little impact, I suppose. So which of these three do you think is the most likely outcome of the sanctions being imposed today? Bora, I wanted to get your thoughts on the more macro, the monetary outlook, because there is a somewhat sideshow, it seems, having been the center of the stage for a long time, Jay Powell and the Fed, whether they will or they won't move forward with further, continuing their cut cycle. It was somewhat baked in and expected. Now it's a coin toss. Your thoughts on which way they'll go, and does it matter either way?
Just my personal opinion, I don't think Jay Powell is gonna, convince Trump about anything. It's too late. So he can probably stick to his guns. What I'm reading from the Fed reports is that they see a divergence between persistent inflation and strong GDP growth and weak job creation. So that's the challenge that they need to handle. And they're
What does
sticking
it
to
mean for the
their
rest of the world?
party line.
Obviously, for much of the recent years of going up the rates mounted and now sort of declining it, the rest of the world has been holding their breath. What does it look like now? I mean, from the point of view of ramifications for the rest of the world, if indeed the Fed does or does not continue with this easing cycle?
I would say, look, the chances of easing have declined, according to the pundits, right? It was about, I read somewhere, 90% chance that there would be a rate cut this year to a 50% chance. And I think that's due to the inflation, the stock market rallying. Why do you need to do this? You need to do this just to make basically optics for Trump. And I'm not sure that the Fed is in the mood to do that. And they're not going to convince Trump of anything at this late date. So Jay Powell is going to run out the clock, and then there'll be a new Fed chairman. And then that person can make the decisions as he sees fit. But there doesn't seem to be a strong case with this level of inflation, for a Fed cut. And let's look across the Atlantic to what Europe has done. They have very low rates in the Eurozone. It's not really helping out Germany create jobs, right? Because there's a structural problem there with respect to the competitiveness of their industries. And I think that structural problem has been their own creation, their own long-term investment decisions, as well as their energy policy. So I think the Fed is right to kind of resist this political pressure to bring rates down to like what, zero? Is that what Trump wants?
Well, I suppose everybody with a big mortgage would like that. Kate, I wanted to get your thoughts again on what was supposedly um, a significant event for the Saudi leader Mohammed bin Salman, Crown Prince, to go to Washington this week. At the end of the week, it feels like actually it wasn't that big a deal. It's certainly a lot of pomp and ceremony in Washington, but hasn't felt like the sort of the impact of it all has had bigger. The headlines seemed a bit of an echo chamber of what we'd already seen. Your thoughts on a takeaway immediate and sort of legacy over the coming months and year ahead?
I don't think it was much ado about nothing. I mean, the sale of the F-35, saying that's quite a big deal. That's a reversal of position, and it goes against what the Israelis want. So I think you're seeing a
And
shift.
with the Qatar security guarantee, similar Qatar type security
Similar
guarantee.
type of security guarantee. The 1 trillion, I mean, that's just a throwaway number. And if you read my colleague Tim Cullen at the Arab Gulf Institute, who used to be IMF station chief in Saudi, he knows a lot. And he's talked about this 1 trillion as a percentage of the Saudi economy. Saudi economy is not doing too great. They've got deficits. He says that would be 80% of Saudi Arabia's annual economic output, which was estimated about 1.23 trillion for 2025. So there's a lot of headlines that come up, and I think the whole thing about the Ukraine, the peace so is much of the same, because let's not forget, Putin's playing chess. Putin cannot afford to come out of this war without any territory that he claims in Ukraine. Are we playing checkers? Are we playing Monopoly? I don't know. But I think there is a bromance. It was very obvious. I think the Saudis know, and we've talked to people who say, we know what Trump likes, we know his game, so we play along with it. They may not agree with everything he does. The nuclear agreement is still a bit vague, but that's another step forward. So I don't think, the only area where I think is a bit of hype is that 1 trillion, but there will be huge investments one way or another. There is going to be growth in the relationship, the trade relationship. US is still the biggest investor in Saudi. There's going to be more investment, particularly in tech,
But it seems to me that all of these sort of headlines and all of these MOUs and whatever else they may be, even the security guarantees, are all sort of decree-like. They're executive orders. The fundamental shift in the U.S. or Washington-Riyadh relations requires treaty-type agreements. One president to the next, the mood shifts. Biden didn't they didn't love each other much. Now there's kind of a love-in with the president, leadership level, but the fundamentals, the treaty-level fundamentals, don't seem to have shifted. Like Trump couldn't probably get a similar treaty through the Congress for the same sort of bucket of security guarantees, I would suspect. So you wonder where the actual fundamentals have shifted. That's not for today's discussion. But final word with our newest member of the podcaster family, Colby. I want to get your thoughts. We talk a lot about whether Russian sanctions will or will not be enforced. Iranian sanctions seem to be a novel thing of history and not the current period. Trump 1.0, we saw it imposed pretty harshly. 2.0, not so much. Your thoughts on the outlook for that going into the new year?
Yeah, I think again the mercurial approach to foreign policy is going to be the decisive factor there. I think, for instance, if you see Iran get particularly aggressive with shipping, to the tune of what was taking place just a few days ago, then maybe you'll see an attempt to bring the hammer down again. But a lot of this ties back to his sensitivity around prices and some of what Bora was mentioning with the Fed. So I think there is a real reluctance to do anything that would be seen as disruptive to supply, unless there's an incredibly strong need to do so. So I think it's something to keep on watch, but I don't think it's an imminent major supply risk for the time being.
Okay, thank you so much. We leave it there. 11 o'clock here in Dubai. Our half hour together is over. We got Brent crude oil down 1%, to 62.74. WTI well below 60. One wonders if this mood continues, will Brent be testing 60 again, or more likely to get back to 65 if indeed these Russian sanctions do bite in? But for the moment, the rock is falling through the water the other direction. Thank you so much for joining us this morning. Kate Durian from your beautiful place in Italy. We're going to have to come visit there, do a podcast from your porch. Colby Connolly, thank you so much for joining us. Be back again, hopefully. And Bora Barryman, as always, one of our anchors out of London. Bora, thanks for getting up early and being with us today. Have a great weekend, everyone. All the best.
Thank you.
Thanks
Bye.
all.
Thank you.